Hello friends, this is Martin from Secret, the channel for learning about trading and investing. Welcome to Markets Tomorrow, the daily market analysis show, where we look at what happened in the market during the day and how we can plan for it, better trade for the next day. So what happened in the market, it was an RBI policy day and it turned out a bit dovish and market cheered for it and then gained 1%. Let's get in the details. Remember, we are doing the analysis for tomorrow, February 11th. Friday 2022. So as usual, our pre-market analysis will be based on all of these parameters that you see on the left side and then additional analysis on the parameters that you see on the right side, right? Data analysis, and then wrap up with some actionables as well. So what does the chart say? So this is a hammer, the bullish gap up. This is not a hammer, but it's a bullish candle and it is a gap up clear, right? So this gap will act as a support now. This gap will act as a support. Both on the left side what you see is Nifty, right side what you see is Bank Nifty, right? So there is a resistance here, right? And here it's Bank Nifty, it's bullish. So let's see the figures, like it's 142 point gains, nearly 1%, bullish hammer. The wick size of the hammer shows the strength of the bulls, and it's the second day that it is closing above the 20 DMA. Bank Nifty, on the other hand, gained 1%, almost the same as Nifty, 401 points, and then formed a bullish handle. And yeah, so Bank Nifty is what is closed for the second day above the 20 DMA, not the Nifty. Nifty moved above the 20 DMA and just closed slightly below that, 5 points below the 20 DMA, right? Intraday price action, if you see, this is what happened, right? It was some volatility in the morning. It gapped up and then gave up 0.5% again, and then it picked up the trend after as soon as the event started, and then it trended, and then after afternoon it was flat. Afternoon, what happened was mainly expiry day. So expiry day would be, sellers will be dominating. They'll be fighting for maintaining the position. That's exactly what might have happened. So it was a gap up and then a dip, and then as soon as the event started trending fully up, and then afternoon mostly kind of consolidation was what was happening in intraday price action. If you see, what do the Bollinger Bands say? So Bollinger Bands, highly volatile Nifty with sideways as a trend, and the bands are clearly turned sideways, and there is some contraction also happening. So that's Nifty. Bank Nifty, small volatility as compared to the Bank Nifty, and clear bullishness above the 20 DMA. Here it broke the 20 DMA but could not close above it in the case of Nifty. And Nifty, it's the second day above the DMA, so it's bullish, less volatile and bullish confirmed in Bank Nifty, and volatile, about to move further up is, but in the sideways short-term trend is what the Bollinger Bands indicate for the Nifty. Now, making out of the support resistance levels, 17,500, 7,600 is cleared, right? So that's a Fibonacci 23 level, and holding that would be the first resistance. The next day closing above that, so that seems to be kind of resistance, and above that it's 17,800, 850. Then above that it's 18,000, then above 18,100, 18,200. Downside supports would be 17,350, 400. And then there is a gap support below that. You can see there is a gap between these two candles, previous two candles. So that will be a very good support zone, right? That means anywhere between 300, 350 is going to be, so the entire 200 to 400, that zone is going to be very good support. 17,200, 17,300 is support, then below that 17,000 support, and after that you have 16,800, 900 zones, which is Fibonacci 38, this is support. That's the support and resistance levels for Nifty and Nifty. Now let's see the momentum. Momentum is sideways still in Nifty, so that's even with the big falls that happened, even after this much of recovery, 3.5% of recovery happening, even then the momentum was not fully picked up into the bull zones. But Bank Nifty, now after having fallen off from the bullish zones, it has climbed back just above the bullish zones in the moment, in the short term, daily. So we should see whether it will maintain that or not. Well, sideways Bank Nifty and Nifty bottoms in the medium term, weekly candle, week is about to end tomorrow, so you can see it tomorrow. But otherwise, it's sideways on the edge. Bank Nifty edge of the bullish zones, you can say medium term. and short term clearly bullishness in Bank Nifty, right? So that is what the momentum, no divergence. Yeah, so there was a divergence that was active and it was pulling down the market, bearish divergence, and then it seems to have taken a U-turn, and then looks like it might have got negated now. Or, you never know. It would again fall back and then meet the target of 37,400 Fibonacci 23. It's still possible, but as of now, the divergence seems to have taken a U-turn and then half a minute, not till the target. So that's the moment. The trend seems to be what has happened in Bank Nifty. The trend has closed out with bullish zones, but Nifty remains to be in bearish zones with falling strength of the bearishness. Here also falling strength of the bullishness. You can see that's a trend. Bullish Nifty and bullish Bank Nifty, and still bearish trend on Nifty. The short term daily volatility is further cooled to 4.5% and 7.71 is the latest India VIX, and black volatility 16.67, and ABP is fallen from the 85 kind of levels at the budget and now to 58. So VIX is substantially cooled off, right? So it looks like it may be heading towards the 15 level. You never know where it can take the support and then again mean toward upside. So as long as it's not going up to the above 20 levels, you can relax. Open interest analysis. This is for the analysis for February 17, 2020, next weekly expiry. So this data that is shown today, since the first active trading, this expiry of February 7th is going to happen from tomorrow only. So today's data may not be that much relevant, but I'm just putting across that. Highest put rating range 16,500 and 17,600. Highest call rating is 17,600 and 18,000. Bank Nifty 38,000 and 40,000 is where the range between highest put rating and call rating, support and resistance basically. Then 39,000 has got good put rating, 39 also has got good call rating as well. So put call ratio is 1 is bullish in Nifty. Put call ratio is near to 1 bullish again in Bank Nifty, and it was futures open interest data showing that today it was a clearly long build up on both indices. Yeah, heat map is showing all green except Reliance was not that green, but all sectors except FMCG, auto, and Siemens. So there was yesterday it was all bullish, but today financials and IT did well. There are metals also did super well, chemicals did well, but FMCG, auto, energy was down yesterday also. These sectors are showing some weakness, but yeah. So we'll see the Fed data, then we'll come to. So index series, what happens is yes. The first one would be HDFC Bank, which is hit a resistance now, but it was a bullish up move. Momentum is still sideways, and HDFC also moved up. It's closed above the previous major support zone, which was a resistance zone after a dip below that, and it is having good volumes, climbed back to the sideways zones, and Reliance also sideways momentum. Nothing much happened. Closed out today. Invi moved up. Momentum is sideways still. ICICI Bank closed green and sideways momentum still. And Kodak Bank also closed green, good bullish candle, but sideways momentum. Right, looks there is a resistance upside. TCS kind of closed red. Momentum is still sideways, but well within a trending channel. Very slow moving momentum. Right, so that's index. Nothing very impressive except that HDFC did well, but we need to watch whether this resistance, major resistance area that's where it is right now, where it's able to so now the great patterns are showing, except that some green movement has happened in the index areas. Sectoral performance IT moved up 1%, metals moved up 1.2%, and auto, pharma, FMCG all closed flat, and realty also moved 5%, 1%. Basically 1% moves in IT, metal, and realty, and auto, pharma, and FMCG are flat. All the momentums are sideways zones except metal, which has turned bullish yesterday itself, and probably you could pick for a short swing trades in the metal sector. So that's roaringly bullish now on the short term. So weekly also has to catch up if you need to take positional bets. So that's the sector performance on the indices of the sectors. Institutional participation, if you see, this is what happened. There is no stoppage for the Fyers selling, but thank God DIs are double their buying somewhat, right? That's the reason why market moved up. So it was the DIs who saved the day. Dollar index on the right side, you can see that it is consolidating, but USD INR is again going and hitting the 75 kind of levels today on a RBI policy day. This is a major resistance zone. Let's see if it is again trying to climb back above 75 levels or not. Right? But momentum is sideways as of now for the USD INR currency pair. Crude oil again showing green candle and heading towards 90, and it's well within a channel, and channel top is somewhere near to probably 100. Right? Momentum is having a divergence, and it is there is every chance that it can shoot up further up. Gold is at the edge of breaking a trend line channel. That trend line channel was attempted to be broken several times during the last 2 years. Let's see if it makes it this time. If that is broken also, you have a resistance upside at 1876. So momentum is almost getting into bullish zones. So it'll be interesting to watch the next coming days whether gold is breaking out or once again continuing with the cup and handle pattern. Handle part of the cup and handle basically. Yeah. Global indices US market seems to have gapped up and then closed green on the Dow. Other indices also seeing green, so that big fall might have halted after it started to bounce from the so momentum is still sideways, but does not tend to the bullishness. You can't say that. No, all are still sideways. All the major indices of Nasdaq, Dow Jones, and S&P are having less momentum, but the downfall seems to have arrested, and it is back on track, well within the channel trend line channel. Two picks, Gujarat Narmada. That is a good pick. It's a rounding pattern, breakout clearly seen, great volumes, great momentum, and great trend. Hindalco is another pick today also. The breakout, it moved up today, but it was indecisive. It's at a major rounding pattern zone with more space left for the parallel channel top to be reached. So there is potential that it can move further. Hindalco charts that you see all daily on both, right? Gujarat Narmada and Hindalco. This is just to revise before we wrap up. Right, this is Nifty on the left side, Nifty showing super bullishness about 20 DMA and then 50 DMA, and it is almost in the bull zones in the momentum. Right, trend is also crossed over to the bullish zones, but Nifty still on the edge, has to still remain bullish, bearish momentum and sideways momentum and bearish trend still on the edge of closing above just a few inches, 5 points below the 20 DMA. So let us wait and watch whether today's hawkish policy bounce survives tomorrow or not. We'll have to see that, right? But Nifty clearly shows the bullishness, so that's why the view for tomorrow remains a mild bullish. The chat patterns, the support resistance, the momentum, the trend crossovers, the sideways bull zones, all those what I already discussed earlier. There is a recovery of 3.5% has happened in just 3 days. Nifty is showing extreme bullishness. Those markets have closed green. Volatility has cooled off. FIS selling is a major worry. Then FIS is non-stop selling. Is not continuing the same way. Right? Positive factors. The main positive factor is Bank Nifty showing great bullishness, and Nifty is not ready to give up. No, it's a bounce that is happening, and 3 days 3.5%. RBI policy event is no new events may be looked at, and it turned out to be a dovish policy, and market reacted well, right? So let's so option strategy. The last point I repeat every time: option strategies. If you are using, always go for overnight positions, to use hedge positions, or non-directional strategies that are again hedged. Intraday future stop loss must, and follow the price action, and be cautious when the volatility is again spiking above the 20-hour. Right, that's a wrap up. My bullishness is but my view. So if that helps you to frame your view and frame your trade plan for the next day, then consider hitting the like button and share it to your friends and colleagues. We have very few subscriptions. Your likes, comments, feedback, and subscriptions would motivate us to keep doing this. Thank you. Thanks for watching. Happy trading. Happy learning. Bye.